Corporate America is spending. Big time. Trillions of dollars are being poured into new factories, data centers, and production facilities across the country. Some call it a manufacturing renaissance. Others say it's an AI arms race. But where is all this money actually going? And what does it mean for the stock market and the economy? After decades of outsourcing and lean investment, capital expenditure, or Capex, is booming again. Companies are finally building instead of just buying back stock. In 2024 and 2025, corporate Capex in the U.S. surged to one of its highest growth rates in over a decade, driven by the Inflation Reduction Act, the CHIPS Act, and new tariff policies. This isn't just a rebound, it's a shift in strategy. So, where's the cash headed? A huge share is going toward semiconductor fabs, multi-billion-dollar facilities built by companies like Intel, TSMC, and Samsung. Another wave is hitting AI data centers, driven by Amazon, Microsoft, Google, and Meta. But it doesn't stop there. Automakers are investing heavily in EV and battery plants, and pharma companies are expanding domestic production. Even foreign companies, from Japan, South Korea, and Germany, are building U.S. factories to get around potential tariffs. Former President Trump claims that trillions of dollars have already been committed to U.S. factory construction. While that may be exaggerated, federal data shows that manufacturing construction spending has more than tripled since 2020, especially in electronics and transportation equipment. This surge reflects both private and foreign investment flowing back into the U.S. capital expenditure is a direct input into GDP. Every dollar spent on construction, machinery, or technology boosts economic output. That's bullish for growth and often for stocks. When companies invest more, productivity can rise, margins can expand, and supply chains become more resilient. But not all sectors benefit equally. AI infrastructure and semiconductor manufacturers could be the biggest winners. Construction firms, equipment suppliers, and industrials also stand to gain. Even utilities, powering new data centers, could see rising demand. The big question now is, will this capital expenditure boom sustain growth, or will it fade once incentives expire? Either way, America's industrial landscape is changing, and investors should be watching closely. The U.S. is rebuilding its productive base. Whether it's AI, EVs, or semiconductors, capital is flowing fast. The question isn't whether money is being spent, it's who will profit the most from America's new investment cycle. Please like, comment, and subscribe.